Hello everyone and welcome to the new Market Weather Bulletin. Today is Monday, 2nd of March. A lot of things has happened over the weekend and on the last few days with the conflict in the Middle East and many other things. So this Market Weather Bulletin will be very interesting, and we'll try to see if we can find some opportunity on the market to make sure we are prepared and we are also especially protected from whatever might happen in the next days. So super important update. Make sure to stay with me until the end. I will try to show some trade setup as well. As always, big shout out to BloFin for sponsoring my channel. BloFin is a super cool exchange. I use it personally for all my crypto trading, so highly recommended to use it as well. You will find the referral link down in the description below, so you can trade with me, but also enjoy a 20% discount on fees, and you will be also eligible to participate in all the very cool campaign we run with the team. Also, before moving to the chart, as always, make sure to subscribe to the channel, leave a comment and a like, so I will know that you enjoy this sort of content. But without further ado, let's go to see the Bitcoin chart. I will focus a little bit more on the current price action, but as always, just a little bit of homework to see where Bitcoin is standing, what is happening. So on very high time frame, let's say, without repeating always the same concept about market structure and other things, I wanted to show you this high time frame. Let me find this high time frame moving average, that is the EMA and standard exponential and standard moving average on the weekly. So as you can see, Bitcoin is more or less trading similarly to 222, similarly to 2022, around the EMA 200 at this level, losing it and starting to trade below. We close a few weekly candle below it, and the point I want to make is the similarity with the bear market we had back in the days at that time. So again, this is a weekly chart. It's very high time frame, not easy to take, let's say, actionable trade setup just based on the weekly chart, but the similarity here, should we continue to trade as in the previous cycle, we might develop something similar to what we had here. When we started to lose the weekly, we started to trade below the weekly. The EMA, that is this upper one, and the EMA started to cross. The moment that Bitcoin reclaim it, they crossed, and you see we started then the uptrend with this few retests we had in this level and moving higher. So again, just to give you the concept that we are in a similar spot, also time-wise, in a similar distance to the recent top. So would not be surprised if Bitcoin start to lose a little bit here, the EMA, start to form, I have no idea about the price level, some sort of long and painful and boring bottom here, with the two EMA crossing each other similarly to what happened last time, and then finally the price will reclaim this area and start to move higher. So this, again, as I started also the last few video, always to give you a little bit of perspective, more in terms of long-term investment, cycle theory, and this sort of stuff. As you can see, the similarity here are very similar, with this bear flag breaking down, this consolidation here. As you can see, this bear flag breaking down, this consolidation we are having here. So until something drastical change, seems the playbook is playing out pretty similarly. So would not be surprised also if this relationship with the weekly moving average, the 200 moving average, would play out also very, very similarly to this price action we had back here. But let's say to go back to the practical concept of this video, high time frame bias remain bearish because this uptrend is broken, because all the local consolidation ended up being distributive. As you can see, all the local consolidation started to be distributive, so we have a very high time frame bearish bias. Also, we know that despite being in a high time frame bearish bias, swing positioning here is not really favoring the shorts, because even if we are in a downtrend, we are always interested to short a lower high, and we are not interested to short a lower low. That is what Bitcoin is printing exactly here. So this is just to keep in mind the fact that we do have in high time frame a bias that is telling us that potentially Bitcoin is still downtrending, but we do not have here, at least in this high time frame, the possibility to go swing short blindly on this level, because this is again is potentially a lower low. So we do have two options in case we want to continue to ride this downtrend. One is to wait for potentially a higher low, a lower high, sorry, and then look for a further move down, or as always, and this will be what we will address in this video because it's more actual and related to the current price action, or we look for the development of the range, and in case this range is deviated to the above, we develop interest for a short because we have a range that allow us to trade despite the fact that this is still a lower low on high time frame. So remember, at least for my style, either we go with market structure or we go with local ranges, or both. So in this case, we do not have the possibility to go with the swing position, short position, because of the high time frame lower low. So we are, at least for swing position, short position, the possibility to look for a development, the development of the current range. Also, for long, as I explained several times on the previous update, and I have sent several charts on X about this point, historically Bitcoin have never bottom or created a local bottom without taking out the lows. So as long as this low at 60k is not taken out, I remain with the bias that this low should be taken out, exactly as all this low has been taken out before moving higher, exactly as this low has been taken out to move higher, exactly as this low has been taken out, exactly as all this low has been taken out before moving higher. And once again, to show the similarity, we are more in a situation where lows are left behind, lows are left behind, lows are left behind, lows are left behind, to be finally taken out, and taken out. So as long as this low is not taken out, I don't see, looking at the current price action, interest in swing longs. Then we will see more in the local time frame if we can find possibility for scalp long. So going a little bit more into details of the current price action, we are basically doing absolutely nothing. So despite whatever you will see, let's say, on the timeline or wherever about Iran war and all the, let's say, noise that is usually occurring on social media or an analyst, this Bitcoin price action shown here in the daily show you that at least at the moment I'm recording in the afternoon of the 2nd of March 2026, nothing is happening exactly since the 6th of February, so 2 months. Bitcoin is simply consolidating in, I don't know, a triangle, a range, a bear flag, I have no idea how we want to call it, but this is an inconclusive price action. So choppy price action here in the middle where no direction has been taken. So I think the daily show it very well. Then you will see that in lower time frame there is for sure volatility within this area, but this is a super non-conclusive price action. Why? Because there is no direction. The direction is simply sideways. Is a decent range volatility wise, because we are speaking about 50% range from 62 to 72 K, so a 10K range price wise. So still interesting opportunity wise, but directional wise, this is absolutely a non-directional price action, since going to the right of the chart, not up or down, is absolutely not a direction. So in this context, we know that liquidity is building because the sideways price action, like the one we are having out, is meant mainly to build liquidity. Build liquidity for which purpose? To fuel the next move either up or down. There are two ways that liquidity is built, and always to repeat myself like a broken record. One is an accumulation where liquidity is built, taken out, and then price move higher. This sideways price action was serving the purpose of big institution, whales, market makers accumulate price in order to move higher. This sort of price action usually have the characteristic of the deviation to the lower band of the range. The other way that liquidity is built is on distribution, where again we have, sorry for my bad drawing, sideways price action. The deviation is usually on the top, price deviate back to continue to go lower. This was a distribution, or in this case, if we come from a downtrend, a redistribution with the characteristic of a deviation on the top of the range to take out all the position built here before moving lower, and in this case, market makers, institution, whales were redistributing in order to push the price for further down. Similarly to the price action, for example, we had here very textbook distribution, range, deviation to the above, boom, and price go lower. Do we know already what kind of sideways consolidation price action is this one? No. Usually the approach of a range trader in a range, is always neutral. So as long as the range is not resolved, we can expect both sides of the range to be broken, either to the above or to below. So that's why range traders simply try to position long at range low and short at range high until the range is finally broken in one or the other direction. What we know is that this range has been forming in a high time frame, and this is what we said at the beginning, downtrend. So there is a slighter higher chance, since the high time frame trend is a downtrend, that also this is a redistribution as this one, or as this first distribution we are in the top. So we have a slight higher chance that this range is simply a range functional to the downtrend that we are having on this bigger downtrend started last year in October. So already having all this criteria, all this reasoning, we go a little bit more into lower time frame to understand what is happening more locally, and we know that this range have two characteristics. One is that external liquidity in the range has not been tapped, has not been taken, and when I mean external liquidity, I refer to the swing high and the swing low that are untapped on this range and are the external liquidity boundaries of this range. As you can see, price has been doing something like this, consolidating here inside and leaving the external liquidity untapped on the external part of the range. with let's say caveat that here there was a little liquidity hunt at the very beginning. So we know that these two liquidity area, starting from the thesis that a range has the purpose to build liquidity on the extreme, these two liquidity area are level of interest to see the price development. So what is our interest in this liquidity pool? As in all the range, we are interested to see if and when the price will reach this level, what will be the reaction. And the reaction at this level are simply two. There is no other option. Either these liquidity level are broken and price goes straight to the same direction, continue to push, so would mean that this was a successful auction to accumulate the price and break above. So here we accumulated and we break above. Or the second option in the liquidity is the liquidity hunt, the deviation, the bull trap, or whatever we want to call it, is that price is moved in this direction, take out the liquidity simply to fake out, come back, form the deviation, and push to the other liquidity level. Basically, to continue the liquidity game, the building and compression of the liquidity game, taking one side, going to the other side. Exactly, just always to show you the similarity as it happened here. So we build this liquidity, we went straight up to take out all the upper liquidity. To do what? Simply to go lower and push the price lower. How do we position and consider ourselves in this regard? Simply, as long as the price stays above the liquidity level, we assume is a successful price action. The moment that price start to deviate back inside, then we will see trade-wise out of position, then we will say, okay, this was a liquidity hunt, there was a deviation with some sort of form here, so we are ready as a range trader to take action again and look for the price to go lower. I'm pointing now this upper band of the liquidity, especially because we are very far to the lower part, but same logic apply to this. This is a liquidity hunt, this is a successful auction, and the price is finally distributing lower. Do I know what will happen? Absolutely no. Do I know how I would like to position myself in this event? Yes, of course, yes. Then I know how I want to do it. Will I be able to do it? That is always a very different story, and it will need some much more effort than making an analysis now for you on YouTube. To add one last concept, but let's say similar to the one I explained before, the more the price will push to a higher liquidity level, leaving untapped lows below, the more, for my style, for my approach, for the way I read the market, the more I will tend to believe that somewhere the price will come back to take them, as it did here, you see. We build all this liquidity up, we never came down to take them out and then move up, but what we did, we build liquidity, did this fake out here, just to take out all this liquidity here. So the more we go up without going down, simply, the more I will prone to believe that this is potentially a fake out, a bearish deviation, and the price will eventually come lower. It's difficult to say where that will happen, but the dynamics is this, because usually to go higher we need to go lower. Usually to go, as you can see, for example here I just zoom out a little bit, to go higher we build liquidity, take out, and then finally price broke to the above. The dynamics here at the moment at least is completely different. Just to pull a couple of indicator or tools, the fixed volume, fixed range volume profile is everything we need in this context. and you will see that we clearly building a lot of liquidity here. That point of control here in the middle is has been traded so many times. So there is a lot of, you can see here in the volume profile, a lot of liquidity here in the middle. And as you can see, all the time price visit this area, price action become super choppy. Just to pull out another indicator, there is RSI that on the 12-hour kind of irrelevant is breaking from the 50 level, so give us a little bit of chance for a push higher. As you can see, just as it happened here, you see how the 50 level is relevant, especially on the daily or in the 12 hours. I'm usually using it. As you can see, very similar price action to the one we formed here, where in this level, exactly in this level, we broke above the 50 level, we went up a little bit, we retested the 50 level, we went for another move up. So as you can see, very similar 50 level starting to be broken here. So we might have an attempt, we will see what happened. As long as we are above the 50 level, for sure there is some momentum coming up, but as you can see, the moment we lost the 50 level was exactly here that we lost again range high and the price broke down. So this is for sure 12 hour or daily. 12 hour is a little bit faster, so easier to monitor and more actionable. For sure 12 hour RSI is another tool you can add in Confluence to all this range theory, range thesis, range logic to monitor momentum. So that's why at this precise moment I'm not interested on shorting blindly this, because there is momentum. There is momentum piling up. 12-hour RSI is breaking above the 50 level. We might get a rejection, but I don't really care too much of trading here in the middle of this range. Just as a caveat, I'm still short Bitcoin, I think, from this level, somewhere around 21, with a stop loss here. Now stop loss is at break even. So not really interested to open another short here again at the same level. So here was, let's say, the very big explanation of bias and the level of interest and the range. So time to look a little bit to potential trade setup, but as I said at the beginning of the video, if you want to trade with me, make sure to do it in BloFin. BloFin is an exchange that I use daily for all my crypto trading, so super highly recommended. Interface is working perfectly. There is a lot of volume, and especially is non-KYC, so you don't need to share any personal information with exchange. You can just trade with an email address, and you will enjoy a 20% discount on trading fees, and you will also be eligible to participate to all the cool campaign we run with the team. This one currently running until the 5th of March, so still 3 days, will give you immediate, as you sign up as a new user, so just with a new email address, will give you immediately the rewards of the VIP 1 level. So a lot of rewards for deposit, a lot of rewards for trading volume, up to $9,400 in rewards. So do not wait further, just click on the referral link down in the description below, and you will start to trade with me on BloFin. So trying to reach the point, let's say the important point of the video, or the most important point for every trader, is that I would suggest and recommend to avoid as much as possible to trade the middle of this range, the mid-range of this range, that is even enough to do it with a parallel channel. That is exactly this one. You will see that in this case it's probably exactly the same as the point of control of the volume profile. As you can see, it's practically the same. This is a super choppy level of this range. So as a range trader, our objective is always to try to trade the premium for the short, discount for the long, and to trade as much as possible at the extreme of the range. So the extreme of the range are the place comparing to this mid-range. So the way to do it is, once again, look for this external liquidity that in this specific case of this range of Bitcoin that has been developing over the past 30 days is to look for 72 260k, and look for anything that appear like a swing failure pattern, deviation, or whatever at the extremity of the range. Can the price drop before? For sure. Maybe we will have a price action here taking out this high here, and we will chop immediately down. Perhaps if this is given and in low time frame, we will see some low time frame market structure break like this. It might give us some scalp opportunity, but personally, this is not a setup, let's say, that would really make me anxious or FOMO not to take it. There is for sure some confluence here because there is equalize. So just to map the chart for you. Equalize. So for sure here there might be some interest. Difficult for me now to tell you how this setup would look like, but let's say that if even for a small rejection here we get this sort of little sweep, low time frame, market structure break, 5 minutes or 15 minutes, retest and moving down, this could potentially trigger a short trade, but the important part, the awareness part you should have in this trade is that this trade would still be a choppy trade in this sort of price action. Okay, so your expectation of this trade, or at least should I trade this trade, my expectation of this trade would be very limited in terms of expansion following this equalize being taken out. So I would take a lot of profit or most of the profit just here, because we would basically do something like this. Now we were squeezing and squeezing in the middle of this triangle. So this could be potentially immediately a trade to be look here, just scalp positioning. Once again, would be a very harsh rejection somewhere here in this equalize, low time frame, market structure break, and then for a look move down. But again, with awareness, very important awareness, that we are trading a very local chop price action, and we are trading a very choppy area that is the mid-range. The priority trade for me would be, as you have been probably understood from the whole video, anything that happen in the external liquidity of this range. So anything that resemble a deviation on top of this range, moving lower, would trigger a short, as always with a low time frame market structure break, and in this case we could be much more generous on our trade and look, since liquidity has been taken out here in the top, we could look for the next liquidity level on the bottom. If you want to find some confluence for this trade, you can see that there is this little consolidation here in the 4 hours. So anything that go to tap that consolidation, come back, rejects and come down again would be an interesting short. For the long, I think is still the same since 3 weeks, is the fact that we have this untapped low exactly here. As you see, the price came down to 60k but left this low untapped. So for the long, it would be similar concept, similar trigger, similar mechanism for the short. Deviation, so we don't go blindly, we want to see acceptance back above, structural market structure break, and then a move to the other side. So more or less copy and paste of the short position, but for the long, looking for something like this. In this case, liquidity game has been completed, taking out not only this but also this one in terms of liquidity, and we move to the way on the other side. We are not interested as range trader, at least for my style, for blindly longing price here or blindly shorting price here. We want, for my style, to see the deviation, the market structure break, the deviation, the market structure break, and then look for the other side. Because we know that range exists, range might last very long, but range at the end always break down or break out. So we don't want to get caught in a potential breakdown or breakout. So we try to defend ourselves how? Wait for the deviation, price to come back inside, wait for the market structure break, the retest, and then move to the other direction. At least we are not 100% safe, but at least we have protected ourselves with some further confidence that potentially this was indeed a deviation. I think is everything for this video. I show you a potential 3-trade setup, let's say a potential scalp long here on this equalize, but again, choppy bias, so choppy awareness, choppy approach, and the short and the long trade in this range. For me, I'll be patient, remain at the range extreme. So is everything for this video. Hope everything is clear. We'll see what happens. As you have seen, all the noise, all the chaos in the Middle East, financial market, whatever, so far has not created nothing spectacular in Bitcoin. So we just respect the chart, we just respect the range, we keep our bias, and we try to execute not according to news, but according to what the price will finally show us. We'll see in the next one. In the meantime, stay safe out there. Bye.